what sort of qualities stand out that you would consider South Africa's Reits, especially since it is a new, young market?
Sure. Well, look, it's early days, and to be fair, it's not the world's largest market, and for some investors, size is important. So there has to be, I think, a couple of things happen. Either the industry grows quite considerably and that just attracts size because you've got index huggers who can't afford not to have exposure as it grows as a part of the index. So when we're looking at South Australian REITs, we want to be confident that what they own is actually capable of producing good long-term returns, and management are capable of extracting those returns and delivering them to unit holders over time. So it's early days for the South African REIT industry. I think the fact that a number of them are diversified, it's hard to put your finger on it, and therefore it's what's called a beta play, where you just want to buy South Africa. We're looking for more what you'd call, and I hate using this terminology, but alpha plays, i.e. individual stocks that are actually capable of being competitive in their own right and produce competitive risk-adjusted returns on a global basis. So, South Australia, it's very early, South Africa is still very early in their growth, and give it time. Patience is important, and managers have to have a strong message of delivering for shareholders. And when you start to get good real estate dynamics and really solid management that are focused on delivering for shareholders, foreign investment will come. So you've just got to be patient and be clear and consistent.
Can you elaborate a bit on trends that we're finding in REITs globally?
Yeah. Look, around the world, it's fair to say that specialised plays are definitely the way to go. If you look at the world's leading platforms, whether it's Simon Property Group, Boston Properties, Westfield, if you're talking about Avalon Bay and multifamily residential in the US, Derwent London, a West End office specialist, Shaftesbury, a West End retail specialist. You're finding more and more of the world's great platforms are focused on particular industry segments or locations. And investors therefore would know what they're getting. And management are more disciplined because they're not off to the next new market or the next new sector that the diversifieds are. So we really like the sector specialists because we know they're focused. We know they're focused on usually on good markets where the value can be really extracted and we can get great returns. What we're looking for is real estate, dare I say it, like any investment, you're looking for real estate which has pricing power. And if you've got that pricing power in select markets, you want to focus all your attention on it. You don't want to be distracted and diversified. You actually want focus. And so that's why focused stocks that are focused on these great markets are very much in favour, absolutely.
Some South African funds are now looking to invest in Africa with a bias towards retail assets. Does this change the way you perceive the South African markets? Because obviously there's a risk.
Yeah, look, retail's an interesting asset class or an interesting real estate exposure because it's been such a strong performer in most countries around the world. Office is very much a commodity asset, i.e. anybody can go and build an office building right next door and poach your tenants. Retail, it's a bit harder and therefore it's a little more protected against supply. So retail's got a very good reputation for consistency. And the other thing that we're seeing in retail is we're seeing internationalisation of retail. I mean, frankly, you go into a local Johannesburg shopping centre, sometimes you could be mistaken for being in a shopping centre in Australia or in parts of the United Kingdom or even Europe, because you're seeing a lot more tenant commonality, rather whether it's the Zaras of the world or H&M who's coming into South Africa. So we're seeing a lot more commonality in retail, and it's been a very good asset class. The fact that some of the South African companies are going, or REITs are going into Africa and rolling out that expertise into virgin territory, look, it's a risk. Clearly it's a risk, but it's one where the lessons of retail, I think we've seen enough around the world, enough commonality. If you can meet certain criteria, you've got a chance. But I want to be clear, it is virgin territory, it's very uncertain, and I hope they're getting much higher risk, higher return to compensate for the amount of risk that they're taking on and going into these unknown territories.
Generally, the perceptions are that global economy is going to struggle next year. Does this affect the way that you roll out your investment strategy in real estate?
We're not economists, and I think that's a good thing. Back in 2007, 2006, 2007, the forecast generally was lots of credit to continue, and it was all rosy. The picture was rosy. There was so much credit available that real estate values were going to keep going up. We didn't share that same enthusiasm. We didn't have a particular view. We just looked at values and replacement costs and started to get a little uncomfortable. So when you talk about a very difficult economic environment or outlook, it could well be. We don't know. We're not going to profess to really predict the next 12 months. It's too short a time frame, quite frankly. What we'd prefer to do is just own good real estate, because good managers and good real estate, you've just got to be patient, and the economies will correct, albeit, I agree, there does seem to be some longer term issues festering in some of the markets. But at the end of the day, good managers, sometimes that's great conditions. Real estate actually does best when you can buy it in distress. That's what you want to do. The problem is low interest rates are encouraging higher people to buy real estate. So even in these distressed economies or economies that are under pressure, real estate values aren't at valuations that suggest any great pressure. So it's a very difficult dynamic at the moment around the world. Low interest rates have really cushioned the downside for real estate, which means you're just not finding the deep value that you would otherwise hopefully find in distress.
There's been a big drive in some developed countries for residential REIT investing, where people have seen the benefits of investing in funds which have some kind of listed exposure to residential properties. This isn't particularly big in South Africa, but why is it that there's such a drive towards residential REIT interest?
Sure. Look, one of the great trends that's going on around the world, and everybody talks about it in China, is urbanisation, but I can assure you it's happening everywhere. The fact is, Tokyo is growing whilst Japan's shrinking. Germany isn't growing, but Berlin is growing. In the US, cities like San Francisco and New York are growing. The United Kingdom's pretty stagnant, but London's booming. So what we're seeing is urbanisation is a trend. It's a super trend that we're seeing around the world at this point in time, as people gravitate towards jobs, lifestyle opportunities, amenities, etc. So that's driving a huge amount of demand for residential in these locations. And some of these people can't afford to buy their property, so they're looking to rent as a consequence. So it's very strong dynamics in the rental market for residential around the world at this point in time. Now, in some markets, you can actually buy US residential REITs in Germany and the US in particular, and they're enjoying phenomenal performance at the moment. US residential, they're basically full. They're getting rental growth of high single digits, and that's extraordinary given inflation is certainly low single digits. So they're enjoying very strong conditions at this point in time. Similarly in Germany, there's a preference to rent. It's only 40% home ownership in Germany. So most people rent. So it's a very interesting and dynamic part of the market at this point in time. So I think for South Africa, if those dynamics, I'm not familiar enough with the market, but if those dynamics are also present in terms of the gravitation of the big cities, etc., I think there is an opportunity to explore for people in the South African residential market to securitise a residential property.